The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil, Chapman sitting in for Larry Pesavento. Larry should be back Wednesday. We're looking at the E-mini right now, $3.75. It made a high of 2403.75 on the 8th of May. Now, as far as I'm concerned, first of all, as far as I'm concerned, great summation, Tommy Jr. He does 3 minutes at 9 o'clock, and he just does a fantastic summation of what's going on, what he's looking at, what we should be looking at. Nice job. Okay. What we're looking at here, the E-mini is at 370, up 375 at 2392. It's still well under the 2403.75. I say well under in the sense that it had 5 days, well, let's include last night into this morning. It's had 4.5 days in which to break above 2403.75. But Larry doesn't use moving averages or the moving average convergence divergence. We call it the MACD, MACD, just a set of moving averages. And the stochastic, also a different set of moving averages. Here's the MACD, here's the stochastic, here's the on-balance volume way at the bottom. Here's the all-time high within 10, 12, 14 points of the all-time high in the E-minis, yet the on-balance volume is at lows. So this is very interesting for me. It's a phenomenon that I've not seen that often. And it is a heads up to say, if there's going to be a brand new buy mode, let me just make it real clear. The E-mini daily at this particular point is really close to a brand new sell signal, and it'll be a sell mode if at any point this week it slides underneath 2382. 2379, that key support has to hold. Why? Because the MACD is now just about to cross negative. This is also where it could deflect higher, which means there's just enough residual strength to say there could be a bounce. But the stochastic down below 80% of the 72% area says, there's really not enough strength for anything other than a little bit of a bounce, and then it should come down lower. But if you look at the 120-minute chart right here, the 120-minute chart made that peak E in the Chapman wave. What do we talk about when we're talking peaks and troughs in the Chapman wave methodology? It's real simple. The objective is to get to a D, and then other things can happen. What does that mean? You identify the lowest, most obvious low bar, and merely count each successively higher peak and label them alphabetically in sequence: peak A, peak B, peak C, D. You can even go to an E, F, and G. It cannot go higher than a G. It can go higher, but it doesn't get labeled as an H. It has to recycle. So D is where other things can happen. Just make it real simple. Objective, get to a D. A D, you need other techniques within the Chapman wave to go higher. And here we are. We went from a D to an E in the 120-minute chart at 2403.75, made lower lows and lower highs. To me, that signals a definitive sell mode. Now, all of a sudden, you're making slightly higher highs and slightly higher lows. Well, actually, the lows are quite a bit higher. So what we're looking at here is there's a chance there could be a squeak today above 2394.50 to go to leg D in the 120-minute chart. The MACD in the 120-minute chart is quite good. You've had huge volume going to that low that was made at 2379, round number low, at noon on the 11th. Huge volume. And yet you still haven't been able to pierce decisively into the 2398 area, which would be very important. So I'm thinking here, based on the stochastic and the MACD, yes, there could be a little bit more to the upside, but we are looking at, and now I'm going to go to something very interesting. I'm going to show it in my show, which is usually at 11 o'clock to noon, the Tiger Technicians Hour, but I'll start some of it right now. You see the weekly chart of the E-mini? You see the MACD deflected lower. It hasn't been able to climb above the green line. The faster moving average has not been able to go above the red line. And the stochastic did jump to 89%, but the price went only slightly higher to 2403.75 from that peak D at 2397.25 in the weekly chart, May the 1st of March. So this is saying upside momentum is beginning to slow. Now, I'm going to go through these real quickly. The NASDAQ continuous contract has gone to a leg E with the potential for a little doji top. And if there's a pullback today, in other words, this trend line that I'm showing you right here, the dashed pink line right there, look at that. This is just, it goes back a long way, and it's been a repellent area. And that's saying that the MACD turning down, hasn't turned negative, but it is turning down a little bit. Stochastic at 94%, very strong. There's enough residual strength to say, yep, we can have a little bit higher move. Maybe it's more time than price. But if there's a snap and it breaks into the NQ, which is at 56.87, remember this is the continuous contract. Let me just see. NQ, I just want to get a sense of what's going on here. So there's 56.87 in the actual June contract, 56.87, and the continuous is at, usually there's a difference, 56.80. So it's exactly the same right now. It starts to become narrower later in the week. So we're looking at this, and it's suggesting that the upside momentum is beginning to slow a little bit, but 56 is the 9-period exponential moving average, this black line. There is a hint with this little thin red line that momentum to the upside is beginning to wane. Sometimes the waves don't see it, and they go a little high, even though the technique of looking at the different tools says, oh, be a little careful. So I'm just looking at this and I'm saying strong resistance today at 57.11. It's at 56.87 right now. But if there is a close in any day under 56.56, up until Wednesday this week, if there's a close under 56.56, that's going to be a problem. Meantime, the weekly chart is still very strong, and the 120-minute chart has made a peak D. Remember, the D was what we saw at 56.87.75 in the 120-minute NQ chart, and that was at noon on the 9th, and now we're looking at peak D again. So we're going to be watching this very closely. For my subscribers, we've been starting to add shorts to different indices. Nothing yet in the NASDAQ. We're real close, but nothing yet. Okay, so I wanted to show you. Let's go to gold. Gold right now is up $8 at 12.36. This is a very nice move. It's so far I'm calling it a counter trend move based on the fact that the weekly chart really doesn't have all that much strength to it. But if the MACD can deflect higher and gold can go above 12.45, close above 12.45 on any day this week, that's going to be very important. Why? Because that's the 9-period exponential moving average, but it has made a leg D. Didn't I just say that? In the 120-minute chart? Oh, no, I didn't. In the gold 120-minute chart, you've got a peak, a leg D. And there's a price time match, which goes to the what I chose as the noon on the 4th of May, the high of 12.37, down to the low of the 5th at the close on the 9th of May at 12.14, and you've gone to a slightly higher high in a shorter period of time, so that's positive. But the trend line right here that I'm showing says we just bumped into resistance right now. Basil Chapman, Tiger Division Tells. Basil Chapman, sitting for Larry Pesavento, trade. I'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. So the relationship of Basil Chapman sitting in for Larry Pesavento, the relationship of the way that gold can sometimes rally and the dollar can pull back. In fact, for most of the year, you will see gold and the dollar moving counterpoint, not percentage-wise, but trend-wise. Once in a while, you'll go maybe 4 weeks, maybe 6 weeks, where they're going in the same direction. We saw that just recently. What we are looking at right here is that within the context of the dollar, it's run up to from the low that was made right here in the 120-minute chart. Back on the 7th, it made a low of 98.50. It ran up. We call this a peak G, a right arm extension at 99.66 on the 11th of May at 7:15 in the morning Eastern time. That is so at 9:15. Sorry, and now it's coming down. And it's coming down, and it's about to hit very important support round about the low of the 8th of May at 98.84. What's the low so far today? So that's 98.84. It's gone down to 98.80. So it's gone just a tad lower. If it takes that out, the next level, I can't actually move. Actually, I will do this. So let me just move this to the right. So we're looking at format to the right. Let's just make it 15 or 17. There you are. Okay. So that would suggest that, no, that's much too long. But it does suggest that by the 16th, by tomorrow afternoon, could be testing the dollar could be testing the low of 98.50 that was made on the 7th of May. All right, and in fact, I could make it a little clearer right here by suggesting there's a Chapman wave inside wedge target line. Yeah, I would say by tomorrow afternoon, we should be testing that if there's any more weakness. Now, what's really interesting is that gold has just made a leg D in the 120-minute chart right at resistance. So we're going to be watching this closely. What I'd like to do is to put this in relation to silver. He's on leg C, so you could go a tad higher, 18. So 16.80, 16.79 right now. 16.85 is the 200-period exponential moving average. So silver's acting very well. So it was interesting that silver was not acting as well as gold. In fact, silver was very weak on the way down. Look, it went almost straight down with barely any troughs, any little V-shaped bottoms. It just kept going down, couldn't even touch the 9-period exponential moving average until, boom, today. zip, it goes right through, and that's very important. Why? Because it says that the stochastic can turn up to 13%. That's good. It needs to get to 20%, and the MACD has made a very sharp Lamar type U-turn on the racetrack, and if it closes above, the green line closes above the red line, that's going to be a big positive and suggest that 17.19, the 9-period exponential moving average, will be a target. Now, because you're getting a little bit overbought in the shorter term, there could be a bit of a pullback, and we've been watching this closely. If we want to put this together with the euro-dollar currency pair, the euro-dollar made a high of 1.02 back on the 8th. Pulls back quite sharply, didn't get to the 200-period moving average, this orange-colored at 1.08, this orange-colored moving average, but instead it made a little V-shaped pattern, and it's in leg C in the weekly chart, still with very good technicals. I think the euro-dollar actually is going to test and then take out the high of 1.102 that was made on the 8th. That's the way it's looking right now, and you've got peak A, B, C. This is leg D in the 120-minute chart becoming somewhat overbought. So I'm thinking that gold and silver could have a little bit of a pullback later today into tomorrow. Dollar has a bit of a bounce, and then maybe the gold starts to move a little bit higher. So that's it. Now, crude oil, let me get to the crude oil. Crude oil right now, strong leg C at 49.53. Hey, this is very interesting. Why? Because within the context of the stochastic having gone from under 20% to 58% right now, and the MACD having crossed positive finally because of what went on in the Middle East with the having some kind of consensus about cutbacks. While we're looking at what did I write? Kind of Chapman wave Roman candle becomes bullish with two closes over 47.60s. Oh, look, that's the candle that we were looking at there. So we've had one close above 47 point. We haven't had a close yet. 47.34, 48.22 was the high. Oh, we have. We've had two closes above 47 in the 47.60s, and this is now at 49.55. I wrote this. I typed it in the other day when I asked the question about crude oil, and this particular candle I call the Chapman wave Roman candle. It was not 100%, but it was very close to that kind of candle. So yes, crude oil can now have a rally. So that's it. The USO is trading at 10.29 pre-market. So it's in leg C to the upside. A, B, C, yep, peak D, and that's going to take out the D high of 10.04. Nice action in USO, which is United States crude. I wanted to just quickly look at high-grade copper. High-grade copper is up at 2.54, up 0.02. This is a leg B. It's just chopping around within a trading band. What am I missing? Oh, of course. What am I missing? I'm missing bonds. Let's see. Bond right now, 151.22, 151.23. So this is going to be very interesting. We're at 151 and 930 seconds. So if I can show you some patterns here, the pattern we're looking at, let me just finish this on the 120-minute chart. There's the low, and now we've got peak A right there, peak B, peak C, and peak D. We've made a peak D, and we're having a bit of a rest. That's what those Ds can do. So having a little bit of rest in bonds, my suspicion is that bonds could rally a little bit if and when the market starts to pull back. And at this point, they just chopping, because if you look at the TNX.X, that's the 10-year yield. Let me just put it in here. If you look at the TNX.X, look at this. Oh no, waiting for attributes. I don't need this. Come on. There you go. Leg C. Oh, this is going to be so interesting. Leg C. 24.16, 24.16. So this is still leg C. All right, pulling back. What I've been talking about for a little while now, and if you want to, you can just look at this chart right at this moment. I'm going to pull it up. This is my triple yield chart. I show subscribers every week. We're looking at the 30-year, the 10-year, and the 5-year. 30-year T bond yield, the 30-year T note yield, and the 5-year T note yield. And look at that. in a trading range with slightly lower highs and lower lows, stuck in the range at 30.09, 3.09 in the white TYX, the 30-year. The 10-year is 23.4, just stuck. And I suspect that the yields will start to slide very soon when and if the NASDAQ finally makes its top, and I think it's really close. Let me see. I'm just thinking here, have I forgotten anything? Oh, the VIX index. So the VIX index, I know Larry likes to look at the VIX index. The VIX index is down in the 10.7 area, 7.1 area. It's in the lower range. We've got a break coming up. Let me just take a moment to regroup, and when we get back, we'll talk about the historic value of the VIX and what's the implication here at 10.71. Basil Chapman sitting in for the one and only Larry Pesavento. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, everyone. We've got the market opening right now. I just want to say that the natural gas has stalled at the double top, made a cup formation, pulling back a little bit. Got to be a little careful here with natural gas. Hit the 200-period moving average, struggling now in a fabulous few days. And the weekly chart shows that this is going to be very important. How does it make an arch formation? Remember, the market is made up of only 3 directional moves. It's either chart formations, I should say. It's either straight up or straight down. Look, that's a straight down move. Or it's an arch, or an inverted V, or it is a cup or a V-shaped pattern. So it's either going straight up or down, or it's going from a left side low, arching over, coming back again, or it's coming from a left side low, cupping down and coming back again. So let's think of that. Dow's up 50 at 20,948. S&P is up 478 at 2385. Let's see what the NQ, the QQQs, they had an exact double top the other day on Friday. Now they've gone, oh, isn't that interesting? The QQQ series is trading at 138.67. So it made a fractional new leg to the upside. And it's really struggling. It's down, it's up 0.01. Usually it's leading the pack. So this is fascinating because everything about the chart formation, I spent a lot of time over the weekend showing my subscribers that the upside should be, from here, should be somewhat limited. And we'll start to see if the 9-period moving average of 137.85 on the QQQ series daily chart is tested or taken out. And the most important thing is a close below the low of the 11th, which is at 137.38, suggests that finally the 9-period moving average is going to become like a magnet, not going too far away on the upside, not too far on the way on the downside, as there's a rolling over of the QQQs. We'll see. Day hasn't even begun. We're like 5 minutes into the, 3 minutes into the market, so we can't really talk about it too broadly. Most importantly, this is what we're looking at, and you've got that cup formation in the 120-minute chart. So I wanted to show you quickly the IWM, which is really very weak, had a nice gap up. It's up 76 cents, 80 cents at 138.29, but the MACD and stochastic are very poor. It's hitting the 9-period moving average. Can it hold? Can it break above? I'm not so sure. It's going to have a tough time. We wanted to look at something like the SMHs, which is the semiconductor index, slightly higher, 83.02, up 17 cents. Now we're going to look at, if you don't mind, just back to the TLT. Yeah, down 42 cents. The TLT has popped to a leg A to the upside in trying to rally off the lows. Make it real simple. In the next 3 days, the close in the TLT, the Lehman 20-year T-bond fund, under 119.91 by, say, Wednesday afternoon, would be very negative, and a push above the high that was made on the 3rd, 122.39, would be very positive. I'm just looking at it as chop, chop, chop in a sideways pattern, same as you saw in the Chapman wave triple yield chart. We've got a caller. We have, I believe, do we have a caller? Well, if we do have a caller, we'll have there. John in Philly. Hi, John. How are you?
Basil, good morning to you.
Good morning to you.
I'm so pleased that you and the TFNN team are navigating this Friday malware attack successfully and up and running. To say that's terrific.
Yeah, you just never, you cannot tell, right? These things come out of the blue. You have no idea what's going on. I did have something happen about 3 weeks ago where I don't know what happened on one of my many computers here. I hit something, and the next thing I knew, it said, if you don't contact us within 5 minutes, your whole system will shut down. So I didn't know what was going on. I quickly called my guy. I said, hey, what do I do? What do I do? He said, shut it down immediately. Wait 10 minutes and open it up. And if it opens up and everything's fine, everything's fine. If it's a problem, it's a problem. So thank goodness I shut down immediately. And I opened it up and everything was fine so far. And let's see if we can go through this malware situation now. But this is, I made a joke. I must have been about 5 or 6 years ago. I said, what happens if at some point someone is able to move all the trades on the stock market just 1 decimal point away, either up or down, doesn't matter. Can you imagine? Huh? All the trades?
That shows absolutely the benefit of having redundancy, at least on a personal level.
Absolutely.
By the way, of course, I called in to ask your assessment on one particular market, but before we get into that, I will give a shameless plug for TFNN and just mention David White. He's got his show on TFNN at 2 p.m.
Yes.
And David does a fabulous job, and he has for years and years.
A long time, yes.
On sharing with us software tools that we individually can use to guard against malware attacks. So, and I suspect at 2 p.m. today, David will be commenting about that. So I'll be listening for sure.
Oh,
so having
good.
made that shameless plug, Basil, I've got a very specific question. Just minutes ago, you posted up your triple yield chart on the three maturities of U.S. Treasury yields. And
That's the week. John, let me just say for people on Tiger TV, it's a black background chart. If you're looking at the chart, it's a weekly chart, goes back a long, long way, and it has, in white is the TYX, which is the 30-year T-bond yield. If you're looking at the brown one right here, that's the middle one. That's the 10-year T-note yield, the TNX, and the FVX is the 5-year T-note yield. And you can see they'll be making lower lows since that peak F. And yes, continue.
Very good. What I would like to ask specifically about dollar TNX, that instrument, of course, is the yield on the U.S. Treasury 10-year note. It's currently at 2.35%, kind of as you rightly comment. It's in the middle of a price range that's been quite tight since last December. So here's my question. Does the Chapman wave technique or your view, Basil, of the fundamental factors, do either of those or the two combined suggest to you that the yield, TNX, is in position to rally above 262 on the way to 3% yield?
So that's a question that goes under the category of the $68,000 question, right? I mean, let's face it. If we were to feel secure enough to even imply that the Japanization of our bond yields staying very, very low, which is what happened to Japan from the 1990s on, if we are going to change that modus operandi and have our yields start to scream to the upside, I'm going to just give you the numbers that I'd be looking at. We have been here many times before. Let me just squash this. We've got a 31-year bear market in the yields. The high was made back in 1981. That was in September of 1981. And since then, there's been, from 1985, there was actually a channel, and we've not broken to the upside of that down channel yet. So if you give me a moment, when we get back, I'll give you exact numbers, and I'll tell you what I'd be looking for to evidence a breakout to the upside and what would say we aren't breaking out. We'll be back with John and Fully straight off this break, folks. Dow's at 54, S&P's up 5.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks, we're back. Okay, here's the question. So John's going to be listening in the den, and what we're looking at is this very strong, this is the TYX, and that's the 30-year yield. Let's go back to the TNX because they've got something slightly different there, because TNX is really what is being looked at all the time by the Fed. Everyone uses the 10-year. They use that for the benchmark for interest rates for housing. Okay, here we go, for mortgages. What we're looking at here is the 10-year Treasury note interest rate trading at 2.345. That's 23.43 is actually 2.343%. However, what's really important about this is that it's just been stuck in this range. And you see this pinky orange colored thick trend line. Let me squeeze this. Look at that. We've been here before, or we had been there a very long time, back in the 1960s. And we haven't been in this area for a long time. So this is what I call the Japanization of our bond yields. And I thought it could end, but it hasn't yet ended. And if it ends, it's going to get quite ugly, because when the genie is out of the box and all of a sudden you're looking at interest rates starting to rise, that's an inflationary aspect. And it's very difficult to get inflation back in the little box once it's out. The little genie, once it's flying around, it's tough. So my suspicion is that at this particular point, we've got deflation in the sense that, I was talking to Tom about it the other day when I was interviewed. I was saying, if you look at almost everything other than things we really need, like healthcare and insurance and stuff like that, there is a choice, and you can in fact spend a lot less money and these days get very good comparable whatever it is quality, and you can by choice spend as much as you want. And I think that's part of this commodity deflation area. And what we're looking at is that yields, in a sense, are telling us the same thing. So here, John, is what I'm looking at. If there is a close on a weekly basis, let alone a monthly basis, I'm looking at a monthly chart here. If there's a close in the TNX, the high 27.59 was the high, 2.759. Let's call it 2.76 was the high back in December of 2013. If there is a close above it in any week, be very careful. Watch this very closely. Why? Because the magnitude of the previous highs, and that's the high of February of 2011 at 3.74, and then you can go all the way back to the 3.75s, etc., back in 2009, 2010. All of a sudden, the yield is actually free to move higher. So this containment area, I call it a containment area, is really important. And if there is a rally in the TLT in bonds and the TLT, the 20-year T bond fund, and yields go down, watch the yield of I'll just put it this way, 2.2. If it takes out 2.2 at any time over the next 2 months, we'll be looking at yields pulling back and bonds going higher. So those are the parameters. I'd even make it 2.29. You can make it 2.29 on the downside. Upside, a break above 26.4 says, whoops, be careful, you've started leg B in the monthly chart. And once you start leg B in the monthly chart, if the MACD is still holding well, the stochastic is gone to, instead of now 79, 80%, if it's gone to 83 or 84%, yields are going to go much higher. So within the context of markets, there's something else I wanted to show you. You see the number of U-shaped patterns in the yields? Let me just take it from there to there, and then I don't want to make charts too messy. Here to here. What we're looking at is there's a time span, and that time span says going from there to there. Let me just do a measurement, and I'll show you what we're looking at. Going up, okay, going from there to there and there to there, I'd be looking at somewhere around September. If in September you've got a spiral into the 2.9s in the yield. So did I say 2.9s? Sorry, I meant 2.7.9 area. That's going to suggest, genie's coming out of the box, and yields are starting to really move higher, and that will automatically give you a test of the January, February highs of 3.06, 3.03. Okay, so that's all I can do. What I'm saying right now is that I think it's just chop, chop, chop to the side. That's really the emphasis that I wanted to make, is that I don't see a breakout yet. If anything, I believe we're getting really close to the NASDAQ starting to pull back. Once that starts to pull back, then I suspect we're going to get a test to see. Now I can do this INDU. Now I can do this to say, then we'll get a test to see whether or not the 10-week, it'll be 11 weeks if there's no new high in the Dow this week above 21,169. The 10-11 week consolidation in the Dow suggests that the QQQs are going to have a rest, while the Dow and the S&P actually hold very well or rally, or whether there's a combined pullback. And that pullback says, when I'm looking at, when I did over the weekend, I went through so many charts, and all I was doing is saying, are they overbought, oversold? I wasn't saying, are they about to tank? I was just saying, are they in the area where the technicals are extremely high? So I show you what I did. I went to, say, Netflix. I showed this chart. You see this up channel? You see the Chapman wave inside track resistance area? It's if Netflix at 161.47 up 60 cents is able to climb into the 163, 164 area, that'll be a breakout. At this point, it's getting really close to some kind of a resistance area of significance, because it's been there before. Google up 4 at 436. Look at this. I never thought I'd find it. If you go from the bottom part with the up channel, you've got a Chapman wave inside track support area, propellant area. Now you're into the Google at this is Alphabet is in the up channel, inside track, repellent zone, and we'll see what happens here. If you look at Amazon, AMZN, same thing, up into that area where it's been resistance. If you're using the downside as a channel line trigger. And what we're looking at is now you're looking at so many of these key stocks in areas that just suggest this is the most simple tool. I didn't need all these lines. I just needed one line just there. And that's what the beauty of trend lines. If you learn how to use trend lines, Netflix, Amazon, Google, and Apple. I want to look at Apple. Did I not do Apple? I did Apple. I thought I did Apple. No, I didn't. I can't remember what I did for my subscribers, but I'll show you something very interesting here. If you're looking at Apple right there, and if you're doing a trend line like that, look, Apple trend line right, look, from that parallel to that resistance, look at that, we're right there. So we're looking at something that's very interesting, because all of the key, not all, a lot of the key stocks that make up the NASDAQ that have been big winners are right now bumping into resistance. Can they break out or will they turn down? Basil Chapman for sitting in for Larry Pesavent. I'll be back with one quick segment as soon as we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just as we're about to wrap up here, let me just say Dow's up 73, S&P's up 9. But look, here's the gold, and I showed you this Chapman Wave inside track repellent line. Showed you that there was a left side, right side price time action went slightly longer, but it was in a leg E and becoming somewhat overbought. The stochastic wasn't confirming gold's move to the upside. Gold is up 6, still very strong, but it was up at 1237. It's now at 1234. So I'm watching this real closely, suggesting there could be a little bit of a sideways to down move over the period of maybe part of the day into tomorrow. We're looking at the dollar DXY made a, whoops, type it onto the chart. No, type it there. DXY having made a peak G, and I showed that support level. It is trying to hold the support level. The low today is at 98.79. It's trading at 98.85. Let's see how this stochastic at 4%, not very strong at all, can give a little bit of a bounce. We're looking at silver. What happened with silver? Let's see. Silver went to that high. It's pulling back a little bit. I don't think it can be, A, B, C. If this is a D, then there's going to be a sharper pullback. If there's a D in silver at 60.74, it could go down to 16.56 quite easily. I'm just watching it real closely just to suggest it's a little bit overbought. We're watching, this is the 120-minute chart on the right. Now let's go to the EUR-USD. It went to peak A, B, C. It's in D right now. So yeah, you can expect some kind of a pullback intraday. But the euro-dollar target is the left side high right there of 1.102. Okay, so as we're about to wrap up this little segment, and then don't forget, you've got Tom O'Brien giving a wrap-up of what happened and what he's projecting for the rest of the day at 10 o'clock, a summation of what's been and what should be coming up. So that should be great. And then, of course, Tom and Tommy together for an hour. I'll be back at 11 o'clock. My Tiger Technicians Hour. My service is the opening call, a very comprehensive daily newsletter. Thanks for being here, and I'll be back in an hour with my own show.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.